On the other hand, the use cases of stablecoins for instant settlement, instant delivery versus payment of tokenized financial assets with stablecoins is the key enabler for digital capital markets. If you don't have digital money, you will not have digital delivery versus payment with a digital traditional financial asset.
All right. Welcome back to another episode of Bitfinex Talks. I'm your host, Ricardo Martinez. Today, I am privileged to be joined by Alexandre Laizet, who is the digital assets lead at Accenture. Accenture is one of the leading consultancy firms worldwide. So I'm very privileged to have Alexandre here. Alexandre, how are you today? Thanks for coming on the show.
Great. Thanks for the invite, Ricardo.
Indeed. So, Alexandre, I didn't do Accenture justice. Do you want to give people a rundown of exactly who Accenture is in the consultancy space before we hop into the interview?
Yes. So Accenture is one of the biggest companies in the world, more than 700,000 employees. We serve thousands of clients. And on the digital assets side specifically, we've been working with 30 financial institutions, major financial institutions over the world on the topic, and growing, now more than 50 even, if you count corporates as well over the world. And the topic is very big, so you have digital assets from a financial perspective, you have, of course, supply chain, identity, but on my end, I focus more on the digital assets from a financial services perspective.
Amazing. So, as a leading consulting firm, how do you guys view digital assets in general, cryptocurrency, and the blockchain industry? What opportunities and challenges do you guys see presenting themselves for your clients?
Yes, so of course, at Accenture, we are agnostic on the technology, and we serve our clients, and our clients are very diverse. You go from central banks to commercial banks, to corporate treasuries. And of course, the topics are very different and they evolved a lot from 2 years, 5 years back. So for now, what we see is, of course, the emergence of Bitcoin and digital assets as a major topic, but as well, of course, as you know, there is CBDC initiatives over the world, and from digital asset custody to payments to tokenization, Accenture deals with all these topics and helps clients on all of this. And in terms of trends, what we see, of course, the Bitcoin ETFs have been a major topic since the approval of the BlackRock one and all the tens of others that issued their ETF. And this has changed a lot from our clients' perspective. And now we have a data point that is very interesting, is that 85% of European and American systemic banks have now opened access to crypto assets, Bitcoin specifically, and other crypto assets, and are deploying solutions at scale. So the key topics of interest and the key projects that we have going on is mainly about scaling solutions both for institutions and retail, both on Bitcoin and crypto assets, and tokenization of capital markets. And this is a huge shift from 2 years back, where it was more of an innovation play and it was lower, let's say, in the hierarchy. Now the requests are coming from CEO level and top management, and we are in board discussions that would make a lot of the industry more bullish about what is going to happen next year.
You mentioned the importance of the Bitcoin ETFs and kind of legitimizing the crypto asset space in the eyes of these institutional players. Why do you think that the response to the Bitcoin ETFs has been so strong and the response to the ETFs for Ethereum have been somewhat lukewarm?
Yes, so of course, we have to distinguish there between the asset and the technology. What we often see is people confuse the value proposition of the technology with the value as an investment of an asset class. Of course, both are linked, both the technology and the asset. It's a bit theoretical to distinguish between the two. But what we see is that, of course, and clients realize that, is that Bitcoin is now perceived and understood by now a majority of clients as the premier digital asset that is really more stable and that has a track record and that is comparable to digital gold and that has been adopted by many and many institutions. Even from the ESG perspective, now many papers are coming with positive analysis, and we have, of course, many more analysis in the background. And so for all of these reasons, institutions are realizing the potential of Bitcoin as a potential next cornerstone of digital capital markets. And what this means is that we are very early still. As Michael Saylor says, it's like year one of institutional grade scaled adoption. And so the next 10 years will be very impressive in terms of the adoption of both Bitcoin and the technology around it, both the layer one and the layers above, and the applications that will be developed. And on the other side, what you have as well, and what clients are very interested in from the very beginning, is Ethereum as a technology for decentralized finance application in centralized finance. What this means is they might take some elements of the technology or use the technology for applications in the financial services world. And what happens is that financial institutions, when they need to invest in an asset, they look at both assets. And of course, the technology of Ethereum is very interesting for automation purposes and such things. But from an investment purposes, let's say that the business case for Bitcoin is much more easy to understand for the majority of institutional investors. And the fact that the supply is fixed distinguishes Bitcoin from all the other digital assets. Of course, other can try to have a fixed supply, but none will match the same historical creation without a founder and the full decentralization to date. So yeah, that's the key distinction between the two, is that you have an asset that is very strong, and you have a technology that is very interesting for certain applications. And what we see emerge is that even in the Bitcoin scene, we see some start of Bitcoin decentralized finance that at the end of the day also make the link with EVM-like technologies. That doesn't mean that this is what will prevail, but what we see is that clients look at these technologies from an agnostic point of view, and where 2 years back they were trying to find what is the best technology, now they look for clients and they look for distribution rails, and they look for the best way to distribute their products. And so where the discussion 2 years back was a bit more theoretical about the functionalities of a blockchain versus another, now the clients really look at where is the liquidity, where is the market, where are the investors, and how can I connect with these digital capital markets that are emerging, and how can I build also my systems in a secure way. And for all of these reasons, it is emerging still, but we see that now about 10% of digital capital markets is being built on Bitcoin layers such as Liquid, and it's a growing trend. And some functionalities such as confidentiality are key also for the financial services sector. So yeah, the technologies are still competing, but in terms of reserve of value, Bitcoin has really demonstrated itself as the premier digital asset.
I want to change the subject a little bit and ask you, like, what specific use cases are like the most enticing, and which industries are you seeing that are showing like the most interest in kind of getting their feet wet with crypto and digital assets as like a path forward?
So in terms of industry, I'm a bit biased because I work a lot with commercial banks
Okay.
on these topics, and it's really where the demand is growing very fast for the last months and years as well. But these months have been an acceleration. To give you an example, even just in France, when I said the 85% from a European and American perspective, we will have several major banks in Europe that will make big announcements in 2025 because they are preparing to launch their institutional and retail products for Bitcoin and crypto asset trading on off ramp for both institutions and retail. So this is coming. This is really where is the market. We see that 50% of the business value, as we estimate, is with Bitcoin and crypto assets by 2030. However, what we see as well in the meantime is that 80% of the business value by 2035 will be on tokenized financial instruments. So tokenized financial assets, traditional financial assets. So the tokenization of capital markets will really take off as well, which doesn't mean that Bitcoin will not continue to grow. It just means that we will have exchanges where you can exchange Bitcoin versus another digital asset, such as a tokenized security, for example. So this is really those are the two topics that are really trending with financial institutions, both crypto assets, Bitcoin and crypto assets, and tokenization of financial assets. And within these categories, you have also different type of offerings, of course. On the other end, there is also a parallel trend of course, treasury, both treasury of using Bitcoin as a reserve asset with the strategy of MicroStrategy, even if we see that it's still a bit more early for major corporates to do the same with the same conviction. But it will come. And on the other hand, also cash management. So cross-border payment, the use of either Bitcoin or stable coins for cross-border transactions. These kind of use cases are also growing, not as fast as the financial services industry, but quite steadily. And we see a shift specifically for specific sectors that have operations in many countries that are resource-based. For example, the energy sector, where both the question of mining and the question of payments becomes very important when Bitcoin as an asset class is growing significantly. So, and these same companies will also have some need of potentially tokenized financing solutions. So we see these trends emerging for corporates. And another application that we see is growing from a more stablecoin perspective is within big multinational corporations, not only the cash management for cross-border transactions operations, but also even for employee either remuneration or incentives. We had seen MicroStrategy, of course, launch their Lightning platform, where they incentivize the employees with Lightning payments. But what we see emerge is this type of credits that you receive within a company for doing trainings or more things. These are also starting to develop with the use of digital assets. Yeah, that's those are key topics. And of course, the topic of wallets more generally, both for the coming CBDC or for the different use cases. The topic of wallet is very recurring, both for digital identity and for the retail applications, for example. And what will be the wallet of tomorrow, where you have your identity, the value that you store, and where you do your transactions, or the certificates that you have, and these kind of things. Those are also topics where big corporations invest a massive amount of funds. For example.
I want to get into the stablecoins thing here in just a moment because you brought it up, but I also wanted to ask you right now with this dichotomy that you said between tokenized capital markets and then the world of like Bitcoin and other digital assets, which one do you see having more potential in like the midterm future?
So I would not separate the two. I think they are highly related. And in fact, it's a pitfall of 2 years back of trying to build tokenized capital markets without addressing the Bitcoin and crypto asset market. I think that it's also a pitfall of building, like 2 years back, very private closed network solutions that are not interoperable by design with other solutions built by the market. This is to be nuanced also by the fact that even private networks can interact between each other with solutions that appear in the market. But in terms of potential for midterm, I would say it depends on the scale. So even if the market today is more with Bitcoin and crypto assets, as a financial institution, for example, if you just try to do 10% on 20 or 20% of the offering of what the pure players are doing, it's not guaranteed that you will make a lot of revenues, because the consumers have the choice between a native exchange and a bank for Bitcoin and crypto assets. So there is a market for both. But it really depends on the investment and on how strategic this initiative is for your bank to launch an application, a solution that will really make sense, not only for the existing Bitcoin and crypto asset user, but also for the 90% of the population that has not adopted the technology yet. So in terms of if you scale both tokenized securities and Bitcoin crypto assets, you can have outsized returns. I would say that it's easier with crypto assets and Bitcoin because of the maturity of the market that is much higher and the interoperability by design of those assets. However, for a financial institution, the core of the business is also the traditional financial assets. So, of course, for them to do something at scale is also very important because it's your core business. And by investing at scale on this, you can gain network effects very fast if you already have a significant market share. So that's what, for example, BlackRock is doing with the money market funds on public blockchains. They leverage both their existing network effects, plus they address the Bitcoin and crypto asset market with these new products and giving access to traditional finance products to a new industry and a new asset class that is emerging. So I would not say one has more potential than the other. I would say, of course, that overall it's very hard to beat Bitcoin returns. So that I would just put a nuance there, because I'm talking about the offerings that clients can launch. But in terms of returns, pure financial returns, buying Bitcoin might be the one use case that can give the most returns with the less let's say, risk of implementation. So that's why, for example, Goldman Sachs has announced like 400 million allocation to Bitcoin ETFs in the US. So yes, they have a strategy of offering digital assets to their clients in different ways, but they also do it by themselves. So I would not put this option aside, let's say.
To take it back to the topic of stablecoins, like, how are you guys viewing stablecoins? I know stablecoins have kind of ironed out some of the issues with crypto assets, like volatility and things of that nature. Do you guys view stablecoins as like growing into a bigger and bigger role in the financial industry in general?
Yes. So outside of Bitcoin, stable coins have been the major innovation of blockchain over the last recent years. And it's giving access to the dollar specifically to many regions of the world that didn't have access to it before in an easy way. So if we take the ESG perspective, it saves a lot of, I would say, households from poverty where their currency is debasing very fast. So that's a major trend that we are observing. From, let's say, a European, US-based perspective, what we see as stablecoin that is very disruptive is first a business model that is impressive. When Tether is generating the same profits as BlackRock, let's say approximately, with 100 employees or so, that is impressive. And of course, financial institutions are paying attention. On the other hand, the use cases of stablecoins for instant settlement, instant delivery versus payment of tokenized financial assets with stablecoins is the key enabler for digital capital markets. If you don't have digital money, you will not have digital delivery versus payment with a digital traditional financial asset. So that's a key enabler for digital capital markets. And also what we see is different approaches. So of course there is the stablecoin approach, but with MiCA there is also some, of course, difficulties and risks associated with it, with the fact that you need several banks to have a MiCA compliant stablecoin. But we see different solutions emerge. So, for example, the stablecoin is one option, and it has the advantages of the interoperability. It has the advantages of being fully backed as well from the, let's say, the traditional structure, pre-MiCA at least. And it has also the benefits of course, the auditability and a bit more innovation on top of it as well, because market participants have access to it and they can build a new application on top of it. So what we see is also the emergence of deposit tokens. So same concept as stable coins, but as bank deposits, not necessarily backed one-to-one. And this is also taking off. And it is related as well to the CBDC, wholesale CBDC initiatives. And major commercial banks are working on issuing their own either stablecoin or deposit token and preparing themselves for a future where there will be some CBDC as well. So what we see in the future is a platform, digital exchanges, where you really can exchange stablecoins, deposit tokens from different networks, from different blockchains, with Bitcoin, with even CBDCs at some point. So we see this platform starting to emerge. Yeah.
I want to take it back to tokenized securities. You mentioned BlackRock. BlackRock has come out in statements saying that they expect like every capital market to tokenize at some point in the future. What do you see as the key benefits of tokenized securities? And do you feel like it'll be a technological leap forward for traditional markets in the sense that they will trade 24/7 now? They will have instant settlement. People will be able to custody their own funds in their wallets through their private keys. Like, what's your perspective on this whole tokenized securities market?
Yes. So the 24/7 piece is quite funny, because clients are realizing as well, wait a minute, this is a 24/7 market. Will we have to work in the weekends and so on? So the 24/7 might actually take a bit of time, maybe, for fully digital platforms, but we are going there for sure. That is the trend. In terms of benefits, of course, the verifiability of ownership and transactions is key, and the transparency with confidentiality is also key. The main benefit is that you have on the same ledger the security token and the stablecoin. And so you have the delivery versus payment of those two assets. And this is what is key. You don't have this kind of delays, reconciliation issues. You really have a process with various steps that is collapsed into one step that is programmable with smart contracts. So that is the key element, the atomic settlement of transactions. And then you have also other aspects like fractionalization. We have data, for example, from clients that have passed a traditional crowd lending business from traditional infrastructure to blockchain infrastructure, and they have been able to issue 3 times more bonds uh, with the same number of employees. So what this means is that normally you had to increase your number of resources to do 3x the number of issuances, and now you can do the same with you can do 3x more with the same number of employees. And this matches with some kind of data points that we get also, for example, for JP Morgan. They get 56% of operational efficiencies on the repo use cases. So with the collateral application. So if you have a tokenized asset, you can then post it as a collateral, and you don't have to call people to know where is the collateral and what is the position. No, it is there, and you can trace it on the blockchain. And yeah, so the full traceability, instantaneousness of the settlement and of the verification of the ownership is key, and the programmability. So even for the KYC processes, you have different KYC check at various, either even within the same organization or between different organizations. So also programming this aspect will also be key, together with the confidentiality piece. That will be the key to really scale those tokenized financial markets.
My last question is about CBDCs. You mentioned that you've been working with various clients that are interested in this type of digital asset. A lot of people have been critical about CBDCs because if central banks go direct to retail and provide citizens themselves with like CBDC money, digital tokens, that would kind of disrupt and disintermediate commercial banks and, you know, other banks that are in the banking system, like kind of as middlemen. Which way do you see CBDCs rolling out? Do you think it's going to be more of like an interbank thing, like among themselves, or do you see it rolling out directly to retail?
Yeah. So there is a whole political debate around CBDCs, and ethical debate. And there is also another debate around Bitcoin as well. Is it good? Is it bad? Is CBDC good? Is it bad? That is not my job. So I will not share perspectives on this. Both are tools. So Bitcoin is a tool that works, and it's the best saving technology. Okay. So then you can make judgments as you want, but this is what it is. CBDCs might be good or bad, and it will depend on basically the political system and the rules around it, but it's also a tool. So the question is more, is the tool working or not? And what are the design elements that are necessary to make it work or not? And what are the requirements of the people of the country or the region? What do they want? What they don't want to see in the CBDC? And then you adapt. Of course, many critics say, no, but even if it's good at the beginning, it could be modified later on. well, it's politics, so that's always the case. And so, very pragmatically, what we see is that it is a technological trend that you cannot stop, which is called the digitization of the economy.
Mm.
So we have digitized a lot of things, and cash will also be digitized, and it has started. And central banks will always exist in some way, shape, or form. Commercial banks as well, and so this money will be upgraded to a new system that might work better than the old one. So now, in terms of prioritization, you have really different aspects between retail CBDC and wholesale CBDC.
Mm.
So for retail CBDC, it is where there is the more pushback, both from retail and from commercial banks.
Okay.
So that's something that people don't know, is that even commercial banks are a bit afraid, because they will basically, in the state of things, at least for the digital euro, they might, and it's not defined yet, but they have the risk of maybe losing some revenue share on some payments, or on some interest that they can generate out of deposits that are not within the digital euro wallet, and this kind of thing. So still under discussion, but that is where there is discussion, at least. And so for these reasons, it will take a bit more time, towards 2028, 2029, even maybe 2030 for full implementation, but it will come. It depends on the legislative process. On the other hand, and it's just a question of upgrade of the payment system, retail payment system, for Europe to not be dependent on private, and most of the time non-European solution. So that is really the goal. And for wholesale CBDC, that is coming a bit faster. What we see is there is more of a consensus from commercial banks, central banks, that there is a need to update as well the interbank payment systems. And there are a lot of experiments going on right now, a lot of projects that do a lot of tries into how this could work or not. And so it will come, but it takes time too. So that's why our clients, from a private perspective, commercial banks, they are also launching their own stablecoin, their own deposit token, because they cannot wait 5 years, 7 years to develop solutions on their own. Because then, if they don't, they will have to use solutions of other banks that have launched it before, and their platforms. And then, as we see, like 80% of the value goes to the service provider, 20% to the tech provider. Can be different, but if you use the service of someone else for your own operations, that is also a risk in terms of profitability for the next 5 years.
Okay. Well, Alexandre, thank you so much for coming on the show and giving us all your experience as a consultant and how you've been advising your clients. It's been super interesting to hear about it. And is there any way that people can get in touch with you or follow you on social media if they want to have you advise them on their business strategy?
Absolutely. You can find me on LinkedIn or X, now to X Twitter. You can find me there, and text me. I will respond.
Okay, perfect. Well, thank you so much for coming on the show. It was a pleasure speaking to you.
Thank you so much, Ricardo.